The Precision Instrument for Value, a comprehensive guide to the Schwab U.S. Large Cap Value ETF, SCHV. As of March 14, 2026, the global investment narrative has moved decisively toward quality and sustainability. In a market that spent the last 2 years digesting the monumental gains of the AI supercycle, investors are now prioritizing companies that offer margin of safety. The Schwab U.S. Large Cap Value ETF, ticker SCHV, has become a top-tier vehicle for this defensive transition, currently trading near its 52-week highs at approximately $31.74. While its competitors often focus on broad market movements, SCHV is a specialized tool for those who believe that the true path to wealth is through the undervalued giants. This researcher's deep dive will break down the fund's low-cost structure, its high-conviction portfolio of over 550 stocks, and the strategic advantages it holds in the current 2026 economic environment. 1. What is SCHV, the architecture of value? SCHV tracks the Dow Jones U.S. Large Cap Value Total Stock Market Index. The fund's objective is simple but powerful. It seeks to own the largest U.S. companies that exhibit the strongest value characteristics, typically defined by low price-to-earnings ratios, high dividend yields, and stable cash flows. The Schwab Low-Cost Advantage. In 2026, the battle for investor capital is fought in the realm of basis points. Expense ratio. SCHV carries a rock-bottom expense ratio of 0.04%. For every $10,000 you invest, you pay only $4 per year in management fees. Passive precision. Because it is a passively managed index fund, SCHV minimizes the human error of active stock picking, resulting in lower turnover, 9.65%, and higher tax efficiency. 2. The 2026 portfolio, the Blue Chip Titans. As of mid-March 2026, SCHV holds approximately 558 positions. The fund is a fortress of financials and industrials, providing a natural counterbalance to the tech-heavy portfolios of the early 2020s. 1. Financials, nearly 19.7% of the fund. Led by J.P. Morgan Chase and Berkshire Hathaway, BRK.B, the financial sector is the largest pillar of SCHV. In early 2026, these firms are the primary beneficiaries of a normalization in interest rates, which has allowed for significantly improved net interest margins compared to the zero-rate era. 2. Information technology, nearly 14.1% of the fund. Unlike some value funds that ignore tech entirely, SCHV includes mature tech. Top holdings like Micron Technology, MU, and Oracle, ORCL, represent the physical infrastructure side of AI. These are companies that trade at much lower multiples than software firms, but are equally essential to the global data center build-out. 3. Energy and industrials, nearly 22.2% combined. With geopolitical tensions in early 2026 causing crude oil to test the $75 to $80 per barrel range, holdings like ExxonMobil and Chevron have acted as a powerful inflation hedge for the fund. 3. Performance and dividend vitals, March 2026. For a researcher, the real-time scorecard of SCHV in March 2026 is one of steady, compounding growth. Key financial benchmarks as of March 14, 2026. Current market price, approximately $31.74. 52-week range, $22.72 to $32.45. Year-to-date return, approximately 8.85%. Dividend yield. The fund offers a forward yield of roughly 2.08%. Dividend growth. SCHV has demonstrated a 3-year average dividend growth rate of 4.72%, making it an effective tool for maintaining purchasing power in an inflationary environment. 4. Strategic comparison. SCHV versus VTV. Investors often ask, why SCHV when I can just buy Vanguard's VTV? In 2026, the answer lies in index diversification. The index gap. While VTV, Vanguard, tracks the CRSP index, SCHV tracks the Dow Jones Index. As of early 2026, SCHV has a slightly broader holding count, 558 versus approximately 316, giving you deeper exposure to mid to large value companies that Vanguard might exclude. Sector tilt. SCHV currently has a slightly higher weighting in financials and industrials than VTV. If you believe the real economy, banking and building, will outperform defensive healthcare, SCHV is the tactically superior choice. 5. Critical risks. What to monitor this week. Even a safe haven has its specific watch items. Interest rate volatility. In mid-March 2026, the Federal Reserve is navigating a simultaneous hold on rates. If inflation data next week comes in higher than expected, value stocks, which are often viewed as bond proxies, could see a short-term price correction. Growth lag. If the AI second wave, applications and robotics, takes off in late 2026, SCHV will likely underperform the Nasdaq. You are trading explosive upside for downside protection. Cyclicity. Because SCHV is heavy on financials and industrials, it is sensitive to the recession narrative. If the 92,000 job loss reported in February signals a deeper labor market cooling, SCHV cyclical holdings may face earnings pressure. 6. Strategy. How to position SCHV today. As of March 2026, the analyst consensus on SCHV is a steady buy. The core holding play. For most investors, SCHV should represent the 30 to 50% core of their U.S. equity allocation. It provides the ballast that keeps the portfolio steady when tech stocks are dropping. The buy the dip entry. Technical analysts see strong support at the $30.50 level. A pullback from the current $31.74 to that range would represent an exceptional value entry. The dividend reinvestment strategy. Reinvesting the quarterly dividends into SCHV is the most efficient way to capture the compounding miracle in a low-fee environment. Conclusion. The guardian of capital. The Schwab U.S. Large Cap Value ETF, SCHV, in 2026 is a story of sanity in the sky. It is a fund that rejects the speculative bubbles of the day in favor of the companies that actually keep the global economy moving, the banks, the stores, and the factories. The verdict, with a record low 0.04% fee, a $15.6 billion asset base, and a portfolio of the most profitable giants in history, SCHV is the gold standard for your real economy portfolio. If you want to own the best of the best at a discount, this is your ticker.